Alright guys, welcome to the next video. This one is going to be on moving averages, specifically moving average bounce. So when it comes to moving averages, a lot of traders use these, especially fund traders, use them for longer term investing as well. They are used in trading and swing trading, day trading a lot. So we're just going to go over them, how you can incorporate them into your trading strategy. So there are a ton of different moving averages out there. Technically, it's a limited amount you could try. These are some of the ones that I pointed out, which tend to be the most commonly used by traders. So there's a simple moving average and an exponential moving average. The 9 and 10 moving averages tend to be very popular, along with the 20, the 50, and the 200 for the simple moving average. So we can go ahead and look at some charts, get some examples of what I'm talking about. We'll go ahead and look at AMD here on the daily time frame. So right now I have a 9 EMA in blue, and I have a 20 EMA in purple. So EMAs are just lines on the chart, and a very simple strategy you can use is just playing the bounce, right? So you can see here we're in an uptrend, stock's making higher highs, higher lows. It comes back right to the 9 EMA in blue here, and then bounces higher, right? So something you could do is wait for a pullback to the 9 EMA, buy there, maybe put a stop below the 20 EMA, and then target the highs or even higher than that. You can go back, we can even look on the weekly time frame. Zoom out here, right here, perfect bounce right down to the 9 and 20 EMA, and then higher again right here, right here, right here. There's a lot of different examples I can show you. Another thing you can do with moving averages is play the crossover. So if I go on the daily time frame, you can see here, as soon as the 9 crosses the 20 EMA right here, you can get short, so down here, and then ride it down here, maybe short the bounce to the 9 EMA here, and continue lower. You can see here, price crosses the 9 EMA crosses the 20 to the upside and ends up shooting higher. Right here, crosses it to downside, moves a little bit lower. So the moving average cross is another example that you can trade. One more would be playing a close above. So if I go to NVIDIA, just another example. You can see here, let me find an example. So maybe, let's say you're playing support and resistance. That's your strategy, right? So you have a support line here, and you have a resistance line up here, right? This is your nice little channel. Something in your strategy could be wait for a bounce at support, and then also your second criteria could be a close above the 9 EMA, right? So right here we get the bounce at support, close above the 9 EMA, and explode higher. Or you could wait for a cross. Right here we get that cross, the 9 crosses the 20, moves a lot higher. You could even wait for a push above the 20 EMA. Same thing works. What I can do is actually put on other moving averages as well. So let me put on some of these. Let me get rid of the 9 EMAs. We can put on the 50 EMA, or sorry, moving average, simple moving average, and the 200. You can change that color to black. There we go. So you can see it's the same thing, right? Comes down to the 200, bounces, back down to the 200, bounces, 50, 50, perfect bounce right here off the 50. If you go to AMD, the next thing I want to mention also is these work on all time frames. So right now I'm just looking at the daily. We could go to like a 2-hour time frame or a 1-hour time frame. You know, maybe you're playing the trend, right? We break below the 200, and that's when you get short. We pull back up to the 50 moving average, and then we reject. Maybe we break support, and then that's when you get in your short entry. Maybe as we break above this bull flag here, and you get above this 50 moving average, that's when you get long. You target the 200. So there's a lot of different ways that you can use moving averages in your trading strategy. The key thing to mention is that there is no correct or perfect moving averages. All of them work in their unique ways, and so it's going to be up to you to test a bunch of them and find which ones work for you. Maybe the one that works for you ends up being like the 44, right? There's a lot of different ones you can test out and see which one works. Right here we got a perfect rejection off that 44. Right here as well off the 200 and the 44. So a lot of different moving averages you can test. So I would suggest picking ones that you think work for you, test them out on the chart, see what works, and these are just another tool that you can add into your trading strategy. So I hope you guys enjoyed this video, and I will see you in the next one.